Happy Monday, everybody. Welcome to another episode of Market Update, where we discuss leading financial and economic developments in Europe, Asia, and North America. My name is Tony. There is a lot to cover today. It's been a busy few days, and it looks to be a very busy week ahead. So let's jump in. And we begin in Asia, where a lot is happening. US President Donald Trump has wrapped up a whirlwind weekend of diplomacy in Southeast Asia with a series of headline-grabbing trade and peace agreements before departing Monday, today, for Japan, the next leg of his three-nation tour that will culminate in a closely watched meeting with China's General Secretary Xi Jinping in Seoul this Thursday. Over just 2 days in Malaysia, Trump presided over a raft of new trade frameworks with Vietnam, Malaysia, Cambodia, and Thailand, and even brokered what he called the, quote, Kuala Lumpur Peace Accords, end quote, between Thailand and Cambodia, a declaration to end months of border clashes. The rapid-fire announcements underscore the administration's strategy of using tariffs and market access as leverage to shape both regional commerce and security, and to build a new order to compete with China. At the Association of Southeast Asian Nations Summit in Kuala Lumpur, the United States unveiled its first outline of its long-anticipated trade pact with Vietnam. Under the framework, Hanoi will grant preferential market access for nearly all U.S. industrial and agricultural exports, while Washington will reduce some tariffs to zero. Details remain vague, particularly regarding how the U.S. will classify transshipped goods, products assembled in Vietnam using Chinese components, that could still face steep duties. This is part of the Trump administration's wider strategy to combat what it sees as unfair Chinese trade practices, and then selling to the American market through transshipped routes, mostly in Southeast Asia, but also in places like Mexico. The deal follows months of trade brinkmanship. Vietnam's levy, initially threatened at 46%, now stands at 20%, still above the rates applied to its ASEAN neighbors. The pact also commits Vietnam to easing import rules for U.S. medical devices and pharmaceuticals, recognizing U.S. vehicle standards, and finalizing agreements on digital trade and intellectual property protection. In parallel, Trump and Malaysian Prime Minister Anwar Ibrahim signed a sweeping trade accord and a critical minerals pact designed to deepen economic ties and counter China's grip on rare earth supplies. Malaysia will provide preferential access for U.S. exports in chemicals, machinery, metals, and agriculture, while pledging not to restrict shipments of critical minerals to the United States. Malaysian companies also agreed to purchase $150 billion in U.S. semiconductors and aerospace components over the next 5 years, along with $70 billion in future capital investments. Quote, "This is a significant milestone," end quote, Anwar said at the signing ceremony. Quote, "Our cooperation will extend far beyond trade." End quote. Trump's diplomacy extended beyond economics. On Sunday, yesterday, he stood alongside the Thai Prime Minister and Cambodian Premier as they signed a joint declaration to manage their contested border, an agreement the White House is touting as a regional peace breakthrough. The 5-day conflict earlier this year left more than 40 people dead and thousands displaced. Quote, "This is so exciting," end quote, the US president said, adding, quote, "We saved maybe millions of lives." End quote. While Cambodia has praised the accord and even nominated Trump for the Nobel Peace Prize, Thailand has described it more cautiously as, quote, "a pathway toward peace," end quote, insisting that true normalization will hinge on Cambodia's withdrawal of troops. The Malaysian leg of Trump's trip also featured side meetings between U.S. Treasury Secretary Scott Bessent and Chinese Vice Premier He Feng, setting the stage for Trump's upcoming face-to-face with Xi Jinping in Seoul, something we will discuss more on today's episode of China Update. Analysts say the Southeast Asian agreements provide the US with leverage as it seeks to reset trade relations with Beijing and compete on the geopolitical stage in the region. As Trump's plane lifted off for Tokyo, where he is expected to discuss semiconductor supply chains and regional security, as well as meeting with Japan's new Prime Minister Takaichi, a space we will follow closely in the coming days. His administration could already claim a pact scorecard, a ceasefire between feuding neighbors, new frameworks for trade across countries, and renewed momentum in America's bid to re-anchor its economic presence in the Indo-Pacific as the Cold War between Washington and Beijing intensifies. Next up, we will make an exception for our North American update and we will look at South America. Argentina's midterm elections have delivered a decisive mandate for President Javier Milei and his pro-market revolution. His LLA party secured roughly 41% of the national vote, well ahead of the Peronist opposition's 32%, granting the libertarian leader a durable foothold in Congress and to advance his sweeping deregulation and fiscal austerity agenda. The result, which followed a sharp political setback only a month ago, has sent an unmistakable signal to investors. Argentina's economic experiment is not only surviving, but regaining momentum. Financial markets are already responding. Early crypto peso trades suggest a 5 to 9% rise against the dollar, anticipating a rally when formal trading resumes. Argentina's bonds, previously battered by volatility, are expected to recover as investors price in a lower risk of political paralysis. With more than 100 seats in the 257-member lower house and 20 senators, Milei now commands enough support to shield his vetoes and push through critical legislation on tax, labor, and pension reform. Goldman Sachs' Alberto Ramos called it a, quote, very strong and conclusive performance, end quote, adding that the new mandate, quote, should strengthen governability and sustain U.S. financial support, end quote. That U.S. backing has become central to Argentina's macro stability. Washington, under President Donald Trump, has already extended a $20 billion currency swap line and directly purchased pesos to stabilize the market. Treasury Secretary Scott Bessent has pledged up to $40 billion in total support, an extraordinary vote of confidence that also reflects Washington's desire to counter China's influence in Latin America. The IMF's existing $20 billion program, combined with this new U.S. assistance, effectively anchors Argentina's external financing for the next phase of Milei's reforms. Milei's victory buys time but not certainty. The libertarian agenda, slashing subsidies, privatizing state assets, and liberalizing labor laws, still faces resilience in both chambers. Without a full majority, Milei will need pragmatic alliances with centrists to pass complex structural bills. One former president has hinted at cooperation, while analysts urge Milei to show flexibility and humility to sustain reform momentum. Economy Minister Luis Caputo insists there will be no sudden devaluation, but investors will watch whether the central bank can rebuild reserves without stifling growth. As political risk recedes and the peso steadies, Argentina may finally have a window to re-anchor credibility after decades of fiscal chaos. The coming months will determine whether Milei's electoral triumph translates into deeper economic stability his revolution promises. Now, if you want to continue to be on top of updates like this on the world's most important markets, consider subscribing to Market Update. Hit the bell notification icon and you will be. And if you're getting some value from today's episode, don't forget to hit the like button. And finally, for today, we move to Europe. The European Union is scrambling to contain fallout from China's tightening export controls on rare earths and related materials. Restrictions that have begun to hit Europe's manufacturing core just as the continent struggles to revive industrial output. EU Trade Commissioner for Economic Security, Šefčovič, held an urgent video call in recent days with China's Commerce Minister, Wang Wentao, agreeing to convene an, quote, upgraded, end quote, China-US export control dialogue in Brussels, quote, as soon as possible, end quote. In parallel, Wang spoke with the Dutch Economic Affairs Minister about the escalating Nexperia dispute, which has disrupted chip supplies to European automakers. The twin crises, the export curbs and the Nexperia freeze, have exposed the EU's deep strategic vulnerability to Beijing's control over critical technologies and minerals. Šefčovič admitted the situation, quote, has cast a shadow over our relationship, end quote, urging a, quote, prompt resolution, end quote, while emphasizing that Brussels seeks de-escalation, not confrontation. Yet Europe's auto industry is already feeling the strain. According to the European Automobile Manufacturing Association, ACEA, existing stocks of Nexperia-made chips could run out within weeks. The Director General warned the situation was, quote, alarming, end quote, affecting, quote, virtually all of our members, end quote, with alternative sourcing expected to take months. Beijing's message, however, appears deliberate. Analysts at the European Council on Foreign Relations argue that Europe is not collateral damage but a calculated target of China's strategic pressure campaign. By restricting rare earth exports and tightening control over technologies, Beijing is signaling that dependence on Chinese supply chains will persist, and that any attempt to build alternatives will require China's tacit approval. For Beijing, these controls are not mere trade tools, but instruments of national security and global leverage. The European Commission is now weighing its options. Brussels is preparing a list of potential trade countermeasures to strengthen its negotiating position and plans to unveil contingency strategies for securing critical suppliers from other partners. Still, the EU's room for maneuver is limited. Germany, China's largest European trading partner, has seen exports to China plunge 13.5% this year, even as imports from China continue to climb, underscoring a widening structural imbalance. In Beijing's eyes, European leverage remains weak. Quote, if you want more rare earth-related flows, end quote, as one Chinese observer put it, quote, then you need to correct your perception of China and start creating the conditions for things to improve, end quote. A veiled threat and a blunt message. We have the leverage. Europe faces a difficult calculus: engage with China to preserve industrial stability or harden its stance and risk deeper economic pain. Either way, the rare earth confrontation has laid bare the asymmetry of interdependence, and Europe's urgent need to treat it not just as a trade dispute, but as a geopolitical reckoning, and a warning that it has become far too dependent on a geopolitical rival. Okay, that is today's episode of Market Update. Thank you so much everybody for watching. Have a good Monday, and I hope to see you for the next episode tomorrow. Adding that the new mandate, quote, should strengthen governability. Adding that the new mandate should, quote, strengthen governability. Adding that the new mandate, quote, should strengthen governability. Oh my goodness. One more time.